Ladies and gentlemen, good day and welcome to the H1 FY23 earnings conference call of Beta Drugs Limited, hosted by Phillip Capital PCG Desk. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurva Shah from Phillip Capital India Private Limited. Thank you, and over to you, Mr. Shah.
Yeah, thank you, Rosal. Good evening, everyone. On behalf of Phillip Capital, I welcome all of you to the H1 FY23 post-earning conference call of Beta Drugs Limited. From management, we have Mr. Rahul Batra, Chairman and Managing Director, Mr. Nipun Arora, Chief Financial Officer, and Mr. Ashutosh Shukla, Director, Sales and Marketing. I now hand over the conference to Mr. Rahul Batra for his opening remarks, and post that we will open the floor for question and answer. Over to you, Rahul, sir.
Thank you, sir. Good afternoon, everyone. First of all, I, on behalf of entire Beta family, wish you all a very happy Diwali and a prosperous New Year. I would like to thank you all for attending this post-earning call of Beta Drugs for H1 22-23. To start with, I'll take on the numbers. The revenue of Beta Drugs is, the consolidated revenue of Beta Drugs is 112.39 as compared to the H1 22, which was 88 crores. The overall growth is 28%. Coming on to the Beta margins, they grew from 20.5% to 20.5 absolute number to 27.13 crores with a percentage of 32% as compared to the H1 21-22. Profit after tax has also increased by 80 BPS, that is from 13.3% to 14.1% as compared to H1 22. The overall ratios also improved significantly, which has already been shared in the presentation. The growth of the company has been derived by all different verticals. The vertical standard, that 42% of the growth has come from the own brands. 58% of the growth has come from the export side. 119 to 120% growth has come from the API side. And 5% from our partners OEMs. I'll just walk you through to the key highlights for the last 6 months. In own brands, first we'll talk about the own brands. In own brand, we have significantly increased our hematological basket. The only flaw which was there in the last couple of years, which we were not focusing upon, we were focusing largely upon the solid tumors, but the hematology was one division where our focus was less. So in the last 6 months, we have increased our hematology basket, and we have recently launched one product, which is Carfilzomib this year. This product has significantly added the revenue towards the top line. Our major top 10 brands have contributed towards 50% of our total sales. I feel encouraged to state that we have added many new prescribers in this half year till now. Coming on to the export side, I feel delighted to share that we have got a major breakthrough in exports through our INVIMA, that is Colombia approval. This was the first step for the company for any regulated approval. The confidence of the staff members, of the family members, is very high further to take on any stringent approvals. We have opened around 4 to 5 new countries in this 6 months. Followed by API. API is one of our key focus area where company has achieved 2 DCGI approvals and the penetration has gone deep into the domestic market. We talk about OEMs. Beta has majorly contributed to the major contributor towards Beta's growth is the revenue from the OEMs. We have well maintained our relationship with all our partners and further strengthening by giving them the quality products at the best prices. Company has also added 3 or 4 new companies which will be commencing soon. The production or the partnership will be commencing soon. Now I'll take up each division, each vertical on a detailed side. What is the plan of moving forward? So as you have seen the growth path from the own brands. So on own brands particularly, what we have been planning and what we have to execute is as follows. The company has increased its presence in all the metro cities. In future, Beta look forward on focusing on 2 to 3 tier cities. We'll also be focusing majorly on the government institution side. For this, we have kept a dedicated team further to enhance our presence in the government sectors. The main government sector where our focus will be relied on, that is railways, army, and the regional cancer centers across India. Beta has continuously focusing upon developing new NDDs and new molecules. We are planning to launch 23 molecules in the next 3 to 4, for which the development has already been started. We are also working on many NDDs, which will be launched later in 2023. In this, we expect a very quite handsome growth and an edge in the oncology market. These NDDs we look forward to launch by 2023 December, and these will be the first one to be launched in Indian market. So this was all about our own brands. Coming on to the API business. In Lab, in 6 months, we have shown a great growth in terms of the sales. This is primarily because we have increased our presence in the domestic market. There's one dedicated person who is looking after the sales of API to the other companies. The best part is that the API, as we followed the path of the formulations, the same path has been followed for the API. The quality has been accepted by almost all the companies, and we are getting repeated demand for the oncology API. This is our major key focus area for next 2 to 3 years down the line. Beta is currently focusing on a new line, which is to be commenced in the next 2 to 3 months. Almost the entire work of that line is over, and we just need to install the machineries that will be commenced by December end. The first CEP, as we talk about the last Concall, which we had on April 28th, the first CEP, which we were supposed to file in the month of October, has been delayed by 2 months. The first CEP now will be filed in the month of January, followed by next 4 CEPs in 1 to 2 years. We are glad to share that on the basic work of the first product, which include the R&D and the scale-up batches, that is already over. We have invested close to around 4 to 5 crores in scaling up the facility of the new line. We'll be majorly focusing on the exports of API, and glad to share that we have got our first export order in the month of October for API, which will be followed by many more to come. This order is from the non-regulated line. The new line which we are coming up with, where we are putting our capex, is for the regulated market. Then coming on to the exports part. Export gives us a lot of excitement right now. Exports will be the major growth driver for our future. For exports, I'm just now talking only about the formulation exports. With our dedicated and experienced export team, we're glad to share that company has signed more than 22 agreements in the last 1 year. We have got a lot of confidence through our Colombia approval, and now we are ready to face any further regulated audits. Already the company has filed an application with Brazil and Mexico. The COFEPRIS Brazil audit is expected in the month of November, and Anvisa, we have already got the confirmation from Brazil that it will be in the month of March. We are also in talks with specialized consultants from EU GMP and SAFRA South Africa, which will be concluded within a 1 month's time. We plan to file more than 200 dossiers in the coming 2 to 3 years down the line. We have a very dedicated regulatory team where we have increased the staff also to file the doses on time. So there the staff is highly qualified and have come from a very reputed company. We are also evaluating the tech transfer models in many countries, which is already under negotiations. This is a new line which we have picked up where the country are right now the major countries are focusing on developing the oncology drugs in their own country. So we have been approached by many companies from many countries that they want to buy the technology know-how from us. There the agreements, what we have initiated is that the API will be supplied by Beta, will be having some royalty from all the partners, and then the technology for manufacturing that particular formulation will be provided by Beta Drugs Limited. As on today, we have opened more than 8 countries where the goods have been supplied. This will be followed by many more in the coming few months. Let's take to the CRAM business. The CRAM business is our major contributor towards our revenue. We aim to provide all our latest products to our partners at the best quality. Already, the new products which are under development have been shown as a keen interest from the partners. The new products, there are 2 products which have been approached by many companies to get those products outsourced from Beta only. So not only those are existing clients, there are some other clients also who have approached us for those products. We aim to add more companies in the coming years, as still we have a lot of leverage in place. Now coming on to our major thing for this particular, that is cosmetology and dermatology. Most of you must be thinking that why Beta has entered into this division, why not they are just focusing only on oncology. My primarily answer for this is that we are only oncology focused company. But if company has brains, if company has time, if company can leverage their brains, they should enter some other division as well. So this cosmetology and dermatology, why we chose was, one is that we have been seeing this division, we have been working on this division since last 2 years. This is one of the fastest growing markets. The most important reason we entered derma is that it is not a high capital investment like neuropsychiatric and cardiodiabetic. The operations, the sales operations are similar to oncology, as the sale process is very identical to the oncology sales. Here, the prescription doesn't flow outside the market. So the product need not to be available at every chemist counter. If we go to a cosmetology or dermatology center, any doctor, they have their own pharmacy. So the first point comes is that it works on the same way as on oncology runs. The most important is that particularly in cosmetics, it is very easy to make an own niche segment. Since we are in research, this will further enhance to strengthen this market. Going forward, we want to make this division a strong brand with substantial number of products, substantial number of revenue, eventually coming up with our own plant in next 2-3 years. For this, the land is already acquired, and further in 2-3 years down the line, we have a plan of coming up with our own plants. I conclude here, and before concluding, the small message is that we would like to say that we'll continue to grow at a pace of 25 to 30% in the next 3-4 years. We'll be continuously working on the new drug delivery systems. Our major focus will be exports and API, which will make our company stand tall in this market. Last but not the least, will make our derma and cosmetology a good brand in the coming 3 to 4 years down the line. Thank you. We hereby invite the questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time may enter star and then 1 on their touchtone telephones. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, sir. So congratulations on the good numbers. Sir, I just have a question. As you said, you are expecting a substantial revenue from the cosmetic dermatology segment. I just wanted to understand, what is the revenue projection from your end? What do you think that this segment is going to contribute in coming future years?
In next 3 years, we have a target of having a top line of 30 to 35 crores.
30 to 35 crores. And any margin expectations from this?
EBITDA margin will be close to 15 to 17%. It can be more also because since the products are outsourced, once the product will be in line in our own production, then the EBITDA margin will grow substantially.
Right. And sir, I just missed out. We have already acquired a land for this part, right?
Yes, we have already acquired a land.
Right. And yes, sir, that's it. That is what I want to ask. I'll follow up again. Thank you.
Yeah.
Thank you. Our next question is from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. Sir, wanted to understand about the dossiers that we have filed in multiple countries. So, does one dossier mean one product?
Yes, one dossier means one product. Yes.
So, these are all formulations, right?
All formulations, yes.
Okay, and what is the cost for, what is going to be the cost of filing so many dossiers?
The thing is, it depends on country to country. Somewhere it is $500, somewhere it is $1,000, somewhere it is $2,000. It depends on country to country. If we talk about Latin, overall the cost of dossier filing is $1,000 to $2,000.
Okay, and so I think we are filing somewhere around 500 dossiers in the next 2 years across these countries that we have mentioned in our PPT.
So filing these many doses now.
Sorry?
We are in the process of filing these many doses, but we have not filed 500, 600 doses. We have, like our clients have shortlisted the products. That count is close to around 300 to 400, and we plan to submit around 200 to 300 doses in the next 2 to 3 years down the line.
So for these 200-300 dossiers, what is going to be the total investment from our side?
So here the thing is, here the initial investment, what model we have chosen is that the initial investment is done by the partner, and then gradually on the first order we reimburse in the amount.
Okay, we will reimburse that amount to our partner.
We'll reimburse on the first, whatever first invoice we'll be raising, so we'll reimburse that amount in the first invoice itself.
Okay, so unless the product is commercialized, we will not be reimbursing it.
No, will not be bearing any cost. There are countries where we will be going ahead with the expenditure. So that is a continuous process. In pharma, if you need to do exports, you need to spend a lot, right? So for exports, basically for exports, we have to do some expenditure in terms of registrations are concerned. So what the registration part, what the expenditure we have done is that we have done the filing part in terms of getting the approvals, in terms of filing for INVIMA, for filing of ANVISA, we have done that expenditure part. So now for the dossiers, the particular client will be bearing that cost. In case the MA belong to us, we can also bear the cost. So that depends totally on different countries altogether.
Okay, so these are the front-end partners for us. I mean, they will be selling the products in those markets with their sales force, right?
Yes.
Okay. And so what will be the timelines to monetize these many products that we are planning to file there?
See, the average time takes around 1 year to 15 months to get one product registered in one country. There are countries which can give you approval in 6 months also, 8 months also, but average time is around 12 to 15 months. So the first commercial order, if you file in any country, may take around 15 months.
Okay, so right now we are filing like 200-300 products. So do you, I mean, are we gonna once we get the approval?
See, the 200-300 products is not gonna be filed today, right? Gradually, it will be filed
2
gradually.
years. I understand.
Down the line, right?
Yeah. So my question is, once we get the approval for all of them, are we going to launch all of them, or is it like at that point in time we will also evaluate whether it makes sense to launch that product because others might have, the competition scenario might have changed?
No. We will intend to launch all the products for which we have filed the doses. The reason is, whatever doses we are filing, we are seeing the future of those products and then we are filing. We are not filing the old products which we used to file.
Okay.
Seeing the
These are all oncology?
part.
Sure. These are all oncology products?
All oncology, yes.
And what kind of margin do you expect from the export side, similar to our company level margin?
Yes. And on the semi-regulated and regulated markets, again, we expect the beta margins to be close between 26 to 28%. And on the semi-regulated or unregulated market, we expect the beta margins to be between 22 to 25%.
Okay. And finally, on this one, what kind of financial arrangements or revenue sharing or profit sharing arrangement do we work with our front-end partners?
So it is very clear that we totally works on advance. We don't give any credit to our outsider. The only partner whom we have built a relationship for 5 years, we tend to give credit for 30 to 60 days. Otherwise, the new partners is totally advance or against letter of credit.
Okay. So we sell our product with some profits in that, and then after that, at what price they are selling, it's up to them.
Exactly. It's like an arrangement where we have an exclusive agreement with them and they have an exclusive agreement with us. So for 7 products, we have given exclusivity to them, and those 7 products they will not buy from any other company from anywhere in the world. So this is how the agreements are made.
All right, sir. Thank you so much. Thanks for the detailed explanation.
My pleasure.
Thank you. Our next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So what is your differentiation strategy and how do you differentiate yourself from the other peers in the market?
Dheeraj, the thing is, and we are one of the exclusive player of oncology. The other companies you see in the market, like you talk about any big player in the market, they are not exclusively in oncology. So whatever our mind, whatever our strength, whatever our focus, that goes only in oncology. That is the one differentiation we see. Then the second differentiation we see is today, even the sales line, the finance line, even the production line, all of us, all our minds work on only one segment. So that is one differentiation we see. Plus, moreover, what we work is we do a lot of research and development on the new technologies. Like we develop albumin-bound paclitaxel, we develop ready-to-use gemcitabine, we develop ready-to-use docetaxel. So all these things make us a niche apart. Apart from that, whatever product which have become off patent, we intend to launch the first in the market. Not only this, we are working on some other NDDS, which will, as I told you that when I was discussing about the own brand, that these NDDS will be launched in the month of 2023 December. So we are working on some technologies which will be the first time in India. So these are something make us niche apart as compared to the market.
So any market share that we enjoy in the domestic market?
Sorry?
So what is the market? So what is our market share in the domestic oncology space?
Yeah, Ashutosh, can you please answer?
You're asking about the market share?
Yeah, Ashutosh, can you please answer all this?
Yeah, it is close to 4%. And so what could be the maybe target for over next 3 to 5 years? So we'll keep on going at the rate of around 25 to 30% as Mr. Rahul has said. Okay. And so second thing, so what is the cancer incidence in India and how the future look alike? The cancer incidence, the prevalence, if you see, there are around roughly 25 lakh cases, which is prevalent in India, and the market, as per the different studies which has been published in recent times, the market is going to explode in near future, in next 5 to 10 years time, and the cancer incidence will be like it is like a it will be like a diabetic kind of incidence in the market, and it is becoming a lifestyle disease nowadays. So 10 years back, 20 years back, you see the cancer incidence was very, very low. We could hardly see 1 or 2 cases
in a village or in a city. But now today in every family, we see one or the other cases. That is how the cancer incidence is increasing in India. So it's majorly becoming a lifestyle disease now.
Okay, got your point.
In cases, we expect that it might cross, the prevalence might cross 2 CR in next 10 years' time.
See, we were reading one article where the survey said that in next 10 years down the line, every one member in the family will have a cancer. So this is how the dynamics will change for oncology.
Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, before we take the next question, we'd like to remind participants that you may enter *1 to ask a question. Our next question is from the line of Gurjot Aluwalia, an individual investor. Please go ahead.
Yeah, hi. Good afternoon, and congratulations on a good set of results. So you talked about the foray into cosmetic dermatology. So on the slide, which talks about that in the presentation, you've also mentioned the point that it has low entry barrier. So I'm just wondering, right, that when you enter the market, what kind of differentiation will Beta be able to create that other new market entrants cannot take away that market share? Because if it's low entry barrier, then other people can also enter into this market. So what's the game plan over here?
Okay. So as you have seen in our last 3-4 years down the line in oncology portfolios, how we have grown our own brand. See, one strength we do have is that we have got an excellent team to handle any situation. Then we have got a very motivated class of team to promote any brand in front of the doctors. You talk about dermatology and cosmetology. So every company wants to diversify their baskets. One is that you have gained some experience from one and putting on that experience to some other division now. Team for dermatology, the GM who has been hired, he has worked in Ajanta for 4 years. The team who has been hired, they all have an excellent experience in dermatology. So this move forward will create a brand differentiation in front of the doctors. Then we do have a habit of creating a brand right from last 3 to 4 years. So we tend to do the same philosophical manner. We tend to do the same effort which we have done in the last to replicate the same in dermatology.
Okay, got it. So basically it's on brand building, where people will be able to differentiate Beta's products versus others.
It is brand building, plus when we launch the product, there are 2-3 products which are niche in the market we have launched. Ashutosh, can you detail about those products?
Yeah, so basically we have launched a couple of products which is a differentiated product in the market. Like for example, Recapro, that is hair growth serum, which contains Redensil, Capexil and Procapil. When we launched this product, there was no company marketing this product. And when we introduced this in the market in front of the doctors appreciated this combination. That is one thing. Secondly, if you see Curatio has a Syndet bar, it is 98%. And we introduced with 99%. That is also like 1% has created a lot of difference in the doctor's mind. That is how we have, launched a differentiated product in the market. And that is where we are getting the acceptance also from our customers.
But the differentiation is not only from the product side, the differentiation is from every side, right from the top till we sell the product.
So for an example, Luliconazole, it's a big market. Luliconazole market size is almost about 1000 CR. When we introduced our Luliconazole, we introduced in the Nanocom. So that is how for every product we are trying to create some or the other differentiation so that we get into the niche segment.
Okay, that really helps understand. So when you're so positive on this particular segment, when you talked about the EBITDA margin, right, you mentioned 15 to 17%. Is it something that will rise substantially as we get some scale? Because, I mean, if you look at the oncology brands, the margins are 30% plus or 35% plus. And this is one of the lowest margin businesses for Beta, the cosmetology, dermatology. So I'm just curious, after all of this, why will the margin be so low?
I'll give you an answer for this. Have you seen the deal which happened between Croatia and Torrent? What EBITDA margins Croatia used to run?
So
it was close to around 32% EBITDA margins. So eventually the margins will be same in line with the oncology only. The only reason why we are saying 15 to 70%, we are trying to be very conservative on the margin side. Till the date we have our own production that will come in 2 to 3 years down the line. We cannot actually give you how much EBITDA margins will be coming. But after the production line is in place, 100% the margins will be in line with the oncology only.
Okay, excellent. Excellent to know your vision. And then just lastly, you also gave like some high-level guidance for the next 3-4 years, right, of 25 to 30% growth. So in the slide presentation, again, it just talks about till FY24, 1 year forward. So are you confident that this growth will be maintained into FY25, FY26 as well?
See, we are entering into a lot of virgin markets, which are virgin for us right now. So those markets are Asia market, those markets are Latin markets, CIS markets. So we are entering these markets. So each and every market has a lot of potential. We talk about the export side. In formulation exports we talk about. So the Latin American markets, which we are our major primary focus, that is Colombia, Mexico, and Brazil. So these markets only will contribute towards a lot of revenue growth in the coming 2 to 3 years down the line. So this growth, whatever we have mentioned about 25 to 30% in the coming next 3 to 4 years down the line is 100% achievable. And we are very confident to have this growth in the coming next 3 to 4 years.
Okay, great to know that, and all the very best. Thank you.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. Our next question is from the line of Ashish Rampuria, individual investor. Please go ahead.
Yeah, thanks for the opportunity. 3-4 questions from my side. On the cash flow, I was just seeing the 6-month cash flow is only 8.8 crores on the operating side vis-a-vis the entire year. FY22 was 29.6. Any reason for a decrease on the operating cash flow?
Nipun, please answer.
Hi, Ashish ji.
Hi, Nipun, how are you?
Yeah, Ashish ji, the major reason was there was a lot of capex addition done in the 31st March 2022, and a lot of creditors were increased in that. So that increase of creditors, which we have paid now, so that has reduced that operating cash flow. So that was capex creditors which were classified in trade payable. So that was coming in schedule of working capital changes.
Got it. So these are not typical. These are not your procurement for the drugs. These are sort of for the procurement for the capex.
Exactly.
Exactly. Got it. Sure. Okay, thank you. The other thing, I'm assuming this 25-30% growth that you're talking over the next 3-4 years, that's basis our onco portfolio, right? That doesn't include the derma projection?
No. That is only onco we're talking about. 25 to 30% is only onco focus.
Got it. Okay. Now, on the before I move to derma business, on this, I think you spoke about this licensing thing that we're doing, right? And where we're supplying API and they will give us some royalty. Can you dwell a bit more on that? Where we are, how many arrangements we have?
See, those things till now, those things have not been finalized. So we should not highlight more on this. But the only thing is we have got an opportunity from 3 countries where they've asked us to share the technical know-how for manufacturing of oncology products. So there, our agreement states that they will be the API will be supplied by Beta only to them.
Mm-hmm.
The technology will be transferred to them free of cost. But whatever sales they will be doing, so they will be paying some royalty on that sales to Beta Drugs Limited.
Got it. Okay. So you're saying still under discussion. Fair point. Okay. But
Still under discussions, yes.
In 3 countries. Okay. Fair point noted. On the derma side, just wanted to check what size of sort of sales team do we have right now, and maybe by in the next 3-4 years, what size do we see for Envisage?
Ashutosh, can you please answer?
Yeah, we have 80 TMs who are the frontline managers, 14 RBMs, and 2 sales managers. And 2 years down the line, we will make it 150 TMs.
Got it. Okay. Okay. Thanks. That's all from my side. All the best.
Thank you very much. Our next question is from the line of Mahesh Thonde, individual investor. Please go ahead. Mahesh, I'm sorry, we cannot hear you. Can you please speak into your handset?
Hello.
Yes, please go ahead.
Am I audible now?
Yes, you are.
Yeah. Thank you for the opportunity. Best wishes to Rahul sir and others. So during last call, you had mentioned that you have started supplies in Georgia. So are you seeing sales growth in Georgia, and whether Georgia and other CIS countries they are targeting are in any way affected by the war with respect to future sales and approvals?
In Georgia, we did some sales in the early 2000 this year, but after that we saw decline in those sales. We didn't get further orders. That partner came to India also to visit us to saw our plant, but after that the sales has not happened. This is basically this area which is called Georgia, Belarus, Ukraine. This has been affected by the war. So our concentration, our focus is not this area right now. Our focus is mainly the Latin and the African and Asian markets.
Okay. Yeah, thanks for the clarification, Rahul sir. So, so currently the exporting areas is mainly for the Latin region, right? If I understand it correctly.
Latin, African, and Asian market, and even CIS also. CIS, this region: Kazakhstan, Russia, then Uzbekistan, Kyrgyzstan.
Okay. Yeah. And thank you. Thanks, Rahul sir, and all the best. That's it from my end. Thank you.
Thank you.
Thank you. Our next question is from the line of Aditi Kaspekar, individual investor. Please go ahead.
Hi, can you hear me?
Yes, we can.
Hi, Rahul. Congratulations on great set of numbers. So I have got 2-3 questions. The first is with respect to, what is our current capacity for API, beta standalone and Adlay formulations, and what's the capacity utilization?
The beta standalone capacity for orals is, we still have leverage for 60-70% for orals. For injectables, we had a constraint in the lyophilized ones, but in April 2022 only, we have installed one big lyo, whereby we have increased the capacity 3-folds now. So we still have lyo leverage to 30-40%, liquid injectable again 30-40%. So this is in terms of beta. And if we talk about Adlay Lab Limited, so in Adlay Lab, in the current scenario, we still have, from the first line, we have a leverage of 30-40%, plus the new line which we adding upon, which will commence by December this year. So that is totally for the export, totally vacant for export.
Okay. Okay. And for Adlay formulations?
Adlay formulation is, to be very honest, it's pretty unutilized. So we have a lot of leverage available in Adlay formulation, because in Adlay we are just focusing on the domestic front. So we are not exporting, we are just exporting to Nepal and Sri Lanka from there, or even Myanmar. So still we have around 60-70% leverage in Adlay formulations.
Okay, got it. So basically what that means is that at least for the next year or year and a half of sales on the onco front, like whatever growth we are talking about, we don't see any major capex requirement. Is that the right understanding?
Exactly. So next 2 to 3 years, we don't see any major capex required till the time we achieve a turnover of 400-450 crores.
Okay, understood. And I think we've done some about 8.8 crore of capex in the first 6 months. What does that pertain to?
So that was mainly for lyophilizer, which we added new lyophilizer in beta. Then 2.5 crore we spent. 1.5 crore was for the lyophilizer. 2.5 crore was for mainly upgradation of the injectable facility. Since we got Colombia approval for oral, so now we are focusing mainly on the injectable part also. So whatever system which was need to be replaced, the HVAC systems need to be validated, and then some filter validations need to be done. So all those things we have done, and the major capex have gone in the upgradation of injectable facility.
Understood. Okay. My second question is with respect to sort of the margins, and I can see that the EBITDA margins, despite investment in our on the derma side, have actually increased, which is a great thing. However, I had a question on the gross margin front. So what it seems like is that compared to the H1 last year, our our gross margins, have moderated a little bit, but that's also accompanied by a decrease in the days of inventory. So is it because, we've been using some high cost inventory that was there on the books and sort of lowering the inventory levels down? And if that's the case, then how do we see sort of the raw material pricing scenario evolve over the coming period? Do we see that it's stabilized compared to the volatility that we've seen in the last few months?
Nitin, can you answer this?
Yeah. Hi, Aditi ji.
Hi, Napam.
Aditi, our consolidated gross margins on the H1 of last year was 37%, and in this year this is 41.86%, or 42%. So I think maybe.
I think you're looking at gross margin. What I meant actually is the material margin, because outside of the manufacturing expenses. So just the sales minus the cost of goods sold is what I was saying. That I think is down to 50.7%, right?
No, I think you are looking at something wrong, because GP margin or sales minus COGS is GP only. Either you have to see EBITDA margin, either you have to see GP margin, or you can see material consumed margin. All those are perfectly okay.
Sorry, what's your material consumed margin then, and how has it moved between the last year and the current year?
If I reduce this, this is 73% margin was last year, and now this is 73% was the material consumed last year, and now it is it's a 68%.
Okay. This is material consumed as a percentage of sales, is it?
Yeah, this is our expense margin, material consumed divided by sales.
Okay, understood. Then maybe I'll take this offline with you, because then maybe there is some difference in understanding here. That's perfect. So then the last question I had was with respect to your receivable days. I think FY22, the receivable days had come down to somewhere around 90 days, and in the first half, it's slightly north of 100 days. And the way I'm calculating is effectively receivables divided by the sales of the last 12 months ending September. Is that because of the new division that we've started, or is there some other reason?
Aditi, I could see the receivable days have moved marginally by 6 or 7 days. That's it. 90 days was our, if I be very precise, it will be 89.9 something in the first half of last year, and now this is 96.
No, I'm comparing with the full year last year. Full year last year was 90 days, so March 22.
Yeah, that was 90 days. Even half year was 90 days, and even full year was 90 days.
Correct. And now they've moved up. Is that because of the sort of the way the new division has been started?
Yeah, the new division also, and the sales have increased, and there is some 4 or 5 days gap, so it is not a very big gap. And after September, there were a lot of payments coming in, so you will not see any much major change in when you are seeing the March 22, March 23 results.
Understood. So it's basically just the cutoff.
Aditi, actually there are 2-3 customers of ours in OEM. They are very big companies, so their payment was halted for some time. But now in October month, they have paid us handsomely, and they intend to clear all the dues by January this year.
Oh, great. Understood. Yeah. Very clear.
So a lot of realization has happened in the month of October.
Understood.
From their side.
Okay. So basically 90 days is what we see as a steady state receivable on an ongoing basis. That's safe to assume, right?
Yes, yes, yes.
Understood. Understood. Very clear. Thank you very much. This is all I had. And on the gross margin front, I think I'll sort of write to you offline to just understand, how you calculate.
Yeah, Aditi, I think there was some confusion because I could not understand what you were saying. You were saying material consumed or cost of production or cost of sales. That you can come offline.
Yeah. I'll send you my working on. I'll send you an email with my working. Thank you.
Yeah. Thank you.
Thank you very much. Ladies and gentlemen, before we take the next question, we'd like to request participants to please limit their questions to 2 so that the management is able to answer all questions. Our next question is from the line of Chirag Fialok from Ratnatraya Capital. Please go ahead.
Hi, good afternoon. Thank you so much for giving me the opportunity. Congratulations on a great set of numbers, team and Rahul. Just 2 questions. One is on the contract manufacturing side. Could you just talk a little bit more about that business? I know you've mentioned that we've added a customer, but what is the trajectory looking like right now? Is this the kind of growth rate that you would expect? Is there something that is happening? And I think you briefly right now mentioned that there's some payments that were halted. Also, were they related to this business? Could you just detail out a little bit more about the contract manufacturing business?
So first of all, there is no payment which has halted, to be very honest. And the contract manufacturing business is going as steady as we were expecting. The growth in contract manufacturing will not be into the line with what we are expecting from the exports and the own brands, because there the control is not ours. There the control is as per their wish, as per that company. So we have added 3 to 4 customers this year, and we tend to increase another 3 to 4 customers in the coming years, in the next year also. So we have cleared audit for some good clients, and we expect that their agreements to be finalized by December this year. So the commercials will start by January or February. So overall growth from there. And the only thing which CRAMS look out for is that we are giving them the best quality medicines. See, our medicines have been well accepted across the industry now. All the hospitals, they go, we go. So it's about the doctors who prescribe the medicines. So they are well aware of the medicines being produced by Beta Drugs or Redley. So on these side, CRAMS business, we are on a perfect line, and we expect the same growth what we are doing in the last 2 to 3 years down the line.
Understood. And from an existing customer point of view, there are no major orders or something that would either...
No, not at all, not at all. You have seen that there has been there has been an increase in the sales of the CRAMS business as compared to last year. We have promoted to them. They are also excited, we are excited, like our sales team is excited. The same way, they are also excited to launch those products in the market, the first one to launch those products in the market. So we never restrain ourselves that the product will be launched only by Beta. No. If we have a lot of leverage, we have a lot of capacity, we produce a lot of APIs. So whatever product we intend to launch, we intend to launch through our CRAMS partners also and through our own brands also. So that's an excitement which makes a relationship.
Great. Could you share how many products are there in the CRAMS approximately, and how many customers at this point in time?
How many products means? Sorry?
How many molecules or products do we manufacture in our CRAMS vertical?
Whatever product list we have shared in the presentation, all the products we are manufacturing for the CRAMS partners as well.
All right, great. And number of customers in totality in that division?
We have total about 28 to 30 customers now, as on today.
Perfect. Thank you so much. Last one question on the new cosmetology dermatology division. Congratulations on the great foray. Could you talk a little bit more about what subsegments would you want to get into, and what kind of molecules are you looking at? If there's any detail that you can share with us at this point in time.
That will be very detailed discussion actually. We have a planned layout for a good next 2-3 years in dermatology and cosmetology. We have prepared our P&Ls for worse, better, and the good ones also. So that will be a very detailed discussion. So
sure.
that will take time to discuss further.
No worries. No worries. Well, thank you so much. Congratulations once again.
Thank you.
Thank you. Our next question is from the line of Raghav from Ace Capital Services. Please go ahead.
Hi, sir. My question is related with the revenue growth projections. So we are saying full year we will achieve around 230 crores of revenue, right? Do you expect that to be even better? Is it like conservative estimates? Or is it like something that you think is the right number to guide at this point in time?
See, to be very honest, there is no word called conservative. This is what we had anticipated. Of course, if we can deliver more, we'll definitely try to deliver more. There are few conversions which we are expecting in the month of January, February. After those conversions, this figure we can even surpass 230 figure also. But at the current moment of time, I can say that this is at least the figure which we're going to achieve.
Sure. Thank you. And my next question will be about the revenue breakup. So I can see overall we have grown this half year 28%. And we have some fantastic growth in our own brand, international and API, but only 5% growth in contract manufacturing. So if I just add up the number, it looks like, and you may correct if I'm wrong, that we are a little bit slow in expanding contract manufacturing, and that's why our overall average is still stuck at 28%, while there are like triple-digit growth in API, 58% in international, and 42% in domestic. It will actually help if you can give us the numbers for these segments instead of just the percentages, so we can visualize which way the business is moving, like more growth in contract or somewhere else.
Okay. Vipin, can you share the numbers, absolute numbers for all the divisions separately?
Yeah, Rahul. So our exports have been 14.5 CR. Our CRAM business has been 54 CR. Our own brand business has been 34.15 CR. Our API was 8.76 CR. And the balance was Derma.
So the current participant is no longer in the question queue. They may have got disconnected. We will move on to the next question, which is from the line of Ashish Rathi from Lucky Investment Managers. Please go ahead.
Hi. Good evening, Team Vita.
I'm sorry to interrupt, Mr. Rathi. We cannot hear you clearly. Can you please switch to your handset if you're on speakerphone?
Is it better now?
Yes, please.
Thank you. Good evening, and wish Team Vita.
This participant's line has also got disconnected. We'll wait for him to come back. Till then, we'll take the next question, which is from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi. Thanks once again for the opportunity. So, if we look at our slide 14, the new launches that we are talking about, they seem to be lower than on an annual basis. They seem to be lower than what we have done historically, like in FY20 and FY22. So, we are now talking about probably 5 to 6 launches every year. So, is that how we expect it to be, or what's the reason we have slowed down here?
No. He is not slowed down. So this year we have launched one product, but there are 4 products which will be launched this financial year. So 2 products will be launched by December, and then 1 product will be launched by January or February. Then coming on to the next 4 years or 5 years down the line, which we have identified. Out of those 23, we have started working on the 12 products. But it doesn't mean that we are going to launch only 23 products. Well, we are working, as I said, that we are working on launch that, or also that will account to around 7 to 8 products. And there are some other products also in oncology which we are looking into. Those products will also be launched. So we'll not restrict ourselves towards only these molecules which we have just mentioned on the slides.
Understood. Thank you. And in the revenue mix, did we say CMO we did around 55 crores in HM?
Yeah, it was somewhere around 54 CR.
54. Okay. So in terms of the revenue mix, do you expect the revenue mix of CMO to remain the same? I think it will go down because you mentioned other segments are growing faster, right?
Yeah, because there you have, see, the only simple logic is that in CRAM business, you don't have a control down the line, right? But in your exports, in your API, where you have your own sales force, own demanding force, where you can create pressure, where you can just navigate them, where you can guide them to get the sales. So there, the command is yours only. So there will be totally, and like the track will be totally like different. There are two different tracks. The CRAM business will go as per its own pace. It will not degrow, it will grow only. But as compared to our own brands, exports and API, those will grow on a much higher scale.
Sure. And the margin profile is the, how is the margin profile compared to the other segments for CMO?
CMO average EBITDA margin is close to 15 to 18%.
Okay. Understood. Understood. All right, sir. Thank you so much.
Thank you. Our next question is from the line of Ashish Rathi from Lucky Investment Managers. Please go ahead.
Yeah, sorry, my line got dropped. Okay, Nipunji, can you just call out the cost that has been incurred in the derma division so that we can understand what is the kind of like-to-like margins that we have seen? Because I can see there is a 110 basis point expansion on the margins YOY, despite the possible derma business losses which would have incurred.
Can you give the consolidated? Yeah.
Hello.
Yes, Nipun.
Yeah, Nipun.
Hello.
Yes, Nipun, please.
Ashiji, the revenue of derma division is somewhere around 1.4 CR, and the cost is somewhere around 2.5 CR. The total cost.
So around 1.1 CR derma division has incurred a EBITDA loss. Correct?
Yeah.
Yeah. Okay. Fine. And can you call out the capex, which is related to the trade payables? The capex part, can you call out that also so that we know how much is actually the working capital?
Sir, it was somewhere around 3.5 to 4 CR.
Perfect. Rahulji, wanted to understand, on export markets, like right now we have around 10-12% of the business coming from the export markets. 3 years out, with all these big approvals coming in from Brazil, Mexico, and the likes in your dossier plans, what kind of contribution do you see from export markets in general as a contribution of total top line?
See, next 3 years, Ashish, this will be the contribution from export will be around 35%, close to 35%.
35% of the company?
Yeah, the revenue for the company, yes, for the oncology business, the export contribution will be close to around 30 to 35%.
So in a way, you're implying that we'll see export business growing 4x to 5x in the next 3-4 years.
100%, yes.
Great. And what is the inspection timeline you said for Anvisa, which is the Brazil one you said is in March? Is that what you said?
Brazil is in March, and Mexico is in this month, November. This year, November.
Mexico is in sooner. And API for export? Sorry?
Mexico, one good thing has happened is that there is one word called homogenization. So that if you have a Colombia approval, the same approval goes to the Mexico. So we have already given our certificate for that, and we might get oral approval for Mexico in next 10 to 15 days down the line. So the only line which will going to be inspected by Mexico will be injectable only.
And Colombia, we have cleared both injectables and oral. Am I correct?
No, Colombia we applied only for orals because that time we were not prepared for injectables.
Okay.
But now we are, since I mentioned that a lot of capex have gone to the injectable upgradation, and now we are ready for Cofapris injectables also. Now the only line which will be expected is Cofapris injectable line. So after this Cofapris is a part of PICS country. So entire Asia, your South Africa, your entire Latin is open after this Cofapris is approved.
Got it. And the API exports you're talking about, that is, should we count it separately or that also comes in the export numbers in general?
No.
If
we talk about 4 years down the line, then the API export will be a part of the total export then.
Okay. And what are these products? APIs, these are all oncology APIs which we have?
Only oncology. See, we are only talking about oncology, and these products will be only for oncology.
Okay. And Nipunji, any sense on the kind of growth that Rahulji is mentioning? Will we need further debt because now we are a debt-free company? Will we have to raise debt in the short term, or any plans of any fundraising, anything on that line? Will we be needing anything, or we can manage with our internal accruals?
As Rahulji has said earlier only, that until 400 CR we don't require any further capex addition, and if required, say 2-3 CR for wear and tear, that is okay. That we can do.
Brilliant. Thank you so much. Yes, Rahulji.
One thing is there, that in case anything required for huge expansions, we already have the fixed deposits for this time only. Like in case some good opportunity comes, so we have in hand around 12-13 crore fixed deposits in hand. So we can do anytime, we can just convert them into cash and we can just go and all out for that particular thing.
Sir, we have kept our strategy clear. You can see our outside liability is lesser than our cash and cash equivalent. So that strategy is very clear and that will remain.
Super. All the best. Thank you, team.
Thank you.
Thank you very much. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Yeah. Thank you so much, everyone, for attending this call. The talk which we do in the initial stages is just about how we are going to perform in the next coming years, coming months, coming years. The only thing is, the only confidence we have is that we have a very good, excellent team in line, right from production to sales to finance. We have all the excellent people who are running this organization. It's not about an individual who is carrying out this. It's about the team. Entire team of Beta is motivated, and the vision we are seeing all together. So we all are in line to create for that path which we have shown in the slides for achieving a growth of 25 to 30% for next 3 to 4 years. Thereby, I conclude here, and thank you all for the conference.
Thank you very much, members of the management team and Mr. Shah. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.